Good day. Ira Epstein of Linn Associates with your agriculture update, and this wrap-up is for Monday, 27th of January, 2020, just after 4:30 p.m. Central Time. You don't need me to tell you. You can look anywhere on the media. I don't know if anybody's even been paying attention to the impeachment. It's all about this coronavirus, and the market went into a tailspin in stocks. It went into a tailspin and recovered nicely in the beans. You're almost 10 cents off those lows. The wheat market came back 13 cents off its lows. These are big recoveries. Meal about $2, oil nearly 80 points. My point is we might have seen value areas for the first time show up. Even the cotton, which got down to 6,800, came back 150 points on the close from the lows. So I don't care if the market's closed up or down. What I'm looking at, did they find some value areas and bump away from them? Now, you did the same thing in the crude. You got as low as 52.13. You came back to 53.14, 80 points off the lows here. And in the rebob gasoline, this was a washout day. You got as low as 144.5 and then bounced almost 500 points off the lows. Yes, you're down, but you're finding value areas is my point. Now, in the past, when we had the SIRS and all that, the markets got nervous, but they build it in very quickly. Be careful. That could be the same case here. That does not mean we have a solution to this problem. It could mean we have a solution to the fact that it's not spreading in other countries human to human. It seems so far that every case has been somebody went to China, and on that trip they caught it, but when they came back, if you're able to control who those people see, it's not being passed along so far. I don't know that it stays that way or not. I did get on the CDC phone call today. I listened to what they were saying in the morning. They were very clear about this. Should you go to China if you have a chance right now? No. Cancel your trip. What are you looking for? Somebody that's got it, and maybe you get the disease. Got to be cautious here. That's where you're at. The charts tell a lot of the story. On the weekly charts, we're pulling back. So you can see how the market came up here. It did make a lower high. It's come down, hasn't gotten under these lows. Once it got under the 18-week average, it's continued to fall by about 20 cents so far. Not the end of the earth, but certainly a pullback. The chart that tells you the story is this one, because when we had this chart up for you, we were looking at this. We had done it, and if you go back, you'll see this is January 14th. It sounds so long ago. It's all of just 2 weeks ago. And when we got underneath, I started bringing up this chart and said, if this is a breakout, where does this market head? First support was right here. Secondary would be right here. And this is what the market started doing in very quick order. And you can see how it fell. And today, you probed into this area for the first time. If I remove this, you get to see how it was this area, because I consider this day important. Then we're going down. We went through that. And the question is, can it get under these lows? That's the big question for the market. When you put a swing line on it, you don't see that. All you see is the lower high and a straight down lower low. When you put the moving averages on, we had talked about the fact that you're liable to get a bearish crossover, which means the shorter term 18-day moving average of closes can get under the 100, another bearish scenario. Resistance right now between 929 and 932.5. How fast is this number falling, that average, the 18-day? Right now it's going to about 3 cents a day, as you can see. So tomorrow you could have, in fact tonight when the market opens, they could get very close to each other. If you were to have a straight up rally, that would be the zone I'd look for resistance. What about the close today? The settlement came back, and instead of this, you had 1 day under the Bollinger Band. This day you closed under the Bollinger Band. This day you closed under the Bollinger Band. That's 3. This day you closed under the Bollinger Band. That's 4 in a row. This day you did not. Market popped up. Guess what it did again? It didn't give you 5. It came right back and settled right on the band. That's not under it. Therefore, the numbers for me start over again. Then I come and look at where the momentum is. And the momentum on the slow stochastic is embedded. Embedded means until the red line closes back over 20, that the market is likely to get sold by the pros on rallies. Now, even if it lost the embedded reading, this is something else to take into consideration. You got a lot of resistance here at 929 to 932.5, that 18-day average. I think regardless of what happens, if the market rallies up there, the pros are going to be waiting for the market for selling opportunities, potentially. When we come to the meal, you're just oversold. Now, have we embedded it all? Both numbers not under 20, both under 20, both under 20, both under 20. You see that. And on the close today, you lose it. So at the close today, what was the warning sign? Get out of Dodge. You could get more of a rally. Where did the market hold again? The Bollinger Band. Each time it bounces away, one of the things I teach is that that's where the market's looking for resistance. At the end of the day, unless this market reopens tonight sharply lower, I expect to see short covering. In the soy oil market, if you knew nothing else, here's the market down on Friday. I am looking for support between here and the 100-day average. I realize we have a bearish embedded reading. That doesn't mean the first challenge of the 100-day average shouldn't be paid attention to. And you can see how the market did the job. It did a nice job of paying attention to it. No, there's no sign in any of this of a trend change. There is plenty of sign that in the meal market, the shorts are wary of staying on that, and the beans just acts like it might want to bounce a little. You're still quite bearish here, but after this bigger break, I think the pros are waiting to see if they can get rallies. In the corn market, this is how you looked on Friday. If you let go, I don't know if you let go or not, all I know is you're overbought with a 75 reading, not embedding. The first support's the 18 and the 100-day average. They're literally together. If you get under 304 and a quarter, what is that, 384 and a quarter? I'm getting cataract surgery soon, so I should see better. But under 384 and a quarter, I then look for the potential. Doesn't mean you have to go there with the lower Bollinger Band. What's our rules? The first challenge on an upside or a downside of a Bollinger Band is where you look for the pros to take some money off the table. You got down to 378.5. They had the opportunity to do that. Are we trending? No, we're caught in these bands, and that's where you're at. Momentum is down, bias is down, but you are not in a trend. In the wheat market, wheat has been the most bullish of this complex, and it too took out this low. So here's how you looked coming in. You still had the pattern of what? Higher lows and higher highs. I've got this down because with tonight's action, you took that out. All you did, though, was go to the 18-day average and hold it. So you stepped out of the uptrend, you have not begun a downtrend, and you have a market that's caught in an overbought condition because you have a reading in the slow stochastic still over 70. That's the way I'm viewing it. In the sugar market, like all the other markets, it too is getting its chops handed to it. Now, you had a warning on this market. This is the close of business Thursday, not Friday. Now, if you remember, on Fridays, I do the weekend edition of these, not the daily. On Friday, you went home, you had lost the embedded reading. Here's your reading of 76. Unless you get it back right away on the reopening today, odds favor price and the 18-day average are going to try to make a run at each other. That's what I think they're doing. Now, tomorrow, this average is going to climb a little. Maybe prices open steady. They can hit each other. First challenge is where I look for the support in this market. In the coffee market, it doesn't matter. It just stays bearish. Lower highs, lower lows. This 100-day average has become important to the market. If you get over it and clear this 113.70, wherever that 18-day average comes in, I'd look for the resistance. It's been a pretty long bear market that started itself in the 140 area. It's hard to want to get bearish some 30 cents lower, almost, 28% or so of its value. Just doing that on my head, but it's got to be in that range. Cocoa market, let's take a look at what this market did. This is Friday. This is the day before. You had an embedded reading, you lose it. It's time to be, if this market doesn't hold up, you've got to get out of Dodge. That's at least what I teach. My theory is that price and the 18-day average will make a run at each other. Doesn't mean I'm going to be right. That seems to be what's happened. Now you can't re-embed. So I'm looking eventually for pricing the 18-day average to make a run. I think on the rallies, the contra trend traders might actually sell this market with stops over that high, seeing if they can press this. In the cotton, let's take a look together at what we had coming in. This was Thursday's action, because I want to get back to Thursday. This is how the market looked Thursday for you. You had a pattern of lower highs. You already had the lower low. Now you're under the 18-day average. If this market's going to fall from here, number one, it shouldn't take out the high way back here. This is the target if it goes down there, and the fighting zone is the 18-day average of closes. You certainly don't want to take out Thursday's high. This is how you end up Friday. So Friday going home, not oversold, bias down, trend down. I'm the first to tell you, going home over the weekend, everybody's scared. Rightly so. We don't know what the WHO, the World Health Organization, CDC, we know we're going to get more cases, don't know what it means to the market. I can just read the chart. That's all I know. If you're going to be bearish, you don't want the 7,100, and the first challenge of the Bollinger Band is likely where the pros are going to move out. You go down today, hit that band, you bounced up in it. What's the trend? Still down. Resistance still here. You don't want to see 7,100 taken out. Live cattle, let's take a look. This is how the market looked going home on Friday. We can go to Thursday. First challenge of the lower Bollinger Band. Okay, remember we didn't do a video on this on Friday. Market comes down, and I know what I've been saying on my weekly charts is this market doesn't look as bad on the weekly as the daily, but this looks ugly. This is still lower highs, lower lows. I think the pros took some money off the table against there on Thursday. If you continue down, then I'm looking for the 100-day average. You went right through that today. In fact, you closed limit down today, the most you can go in one day. There's no reason to be bullish. You've had a breakout of this sideways action to the downside. Like we looked at beans on a breakout, this is a breakout in this market as well. But I do think you're going to get some short covering. Same in the feeder cattle. This sideways action is now a mess to try to carve through. We don't know what China's doing with beef imports. We don't know what they'll do with grain imports. They have their hands full, you can imagine. And every night we're waking up, there's hundreds of more cases. What's the real number? Why are they building 2,500 beds when they only have reported about 3,000 cases? There's got to be a lot more to this, and that's what at least logic tells me. When we come to the hog market, here's the hogs coming in. You have a higher high, you got a lower low pattern because of that. Don't know where we're at on the chart. I think I said that during the week too. And now the question is, do you go back and challenge the band? And if you do, I don't care if tomorrow's another limit down day. I'll still say that's where I think the pros took some money off the table, and you did close limit down in that market, as you can see. So you put it all together, the boards are clearing. I'll do another series of tapes for right after 5. But to keep up with these markets, you need information. And we write throughout the day. We don't write an end of the day piece as so many firms do. We're writing throughout the day. If you get into our charting service, you get our news feeds all day long, and you're really kept up with what's the newest thing happening, where is it, how's it impacting, from the coffee market to the soybean market to the hog markets. We're telling you if the people are doing anything in the pits. What are they doing? What are the options traders doing? And you know as well as I do, there's not a pit any longer to trade the open markets. It's only the options, and not for all of them. But there's enough there that we get information. How do you get it? Give my staff a call. They'll hook you up for it. You can go to our website, hook yourself up for it, and choose from our different products. But if you haven't seen our trading platforms, you should. It's not just our written commentary, oral commentary throughout the day. And if you miss it, you just go into the media center there. It'll play for you. Hightower reports, they're all there. I'm Ira Epstein. Hope we hear from you. Have a good day.